I'm sure there'll be probably a few more people coming in, joining us as we go along, but I want to get us going so we have some time both for our presentations and also for some discussion. So first of all, again, thank you for being here. My name is Hans Walter-Peterson. I'm the viticulturist with the Lakes Grape Program, and one of the people to help organize this. And if you're seeing weird gray boxes showing up on your screens, it's probably something I'm doing and not something that you're doing. So I apologize for that. As soon as I stop sharing the slide, it'll probably go away. So the meeting that we're doing today is, as you can see there on the slide, what if I can't sell all of my grapes? Tools for evaluating the impact of COVID-19 market disruptions on New York vineyards. And this topic came about as a few of us had been talking about just kind of, and talking with growers and winemakers about kind of how things have been going in with sales. And so with the wineries and during the shutdown of tasting rooms and a lot of sales to bars and restaurants obviously being cut off for a lot of wineries. And so the idea behind this meeting then was to kind of try to bring a couple of people together to just give some, start a discussion about how growers should be thinking about, or could be thinking about, kind of how to deal with this market uncertainty. You know, this obviously is not normal circumstances. Wineries are having a harder time selling wine kind of through a lot of the normal channels, like I said, tasting rooms and bars and restaurants. Things like shipping and online orders have probably taken a significant step forward for a lot of wineries, but we'll talk about that when we get to the survey results here. But I think I thought it would be an important topic, and a few of us kind of put together this seminar to talk about this and talk about kind of what are some tools for growers to think about, and perhaps wineries too, to think about as they think about their market this coming fall as we get closer to harvest. If you came at looking for very clear black and white answers, probably not going to get that, I'm afraid. But what we do hope is that you'll be able to take away some things that can help you think about some questions, maybe think about things a little bit differently, maybe a couple of tools that can help you as you think about putting in the expenses of running your vineyard this year when kind of the end market really might not be as certain as it sometimes is. So so I think with that, we should go ahead and get going. So I'm going to stop this. And our first speaker is going to be Kevin Martin. Kevin is the Farm Business Management Specialist with the Lake Erie Grape Program out in Portland, New York. And Kevin is going to, I think, share some of the results of the surveys, of the survey that we took. So for all of you who filled that survey out, thank you for doing that. And we'll kind of take it from there. So Kevin, I will stop this.
Hi, everybody.
Mute myself.
Thanks for having me, Hans, and I want to thank everybody for joining us. I'm going to take a stab at sharing my screen here. As a lot of you probably know, and I think participated in, we did do a survey to help us prepare for this. As a result of that, does my PowerPoint look like it's in presentation view or something different, Hans?
It looks like you're in that editing view.
Okay, let me fix that. So the first thing I want to do is thank everybody who did participate, because it did help us out quite a bit in terms of trying to understand what was going on in the marketplace. And also, more importantly, I think figure out where everybody feels like they stand right now. The goal of the survey, and I think it's important to define what we were trying to do, is to really share this outlook between industry participants. You know, particularly as things changed really quickly because of COVID, we want to make sure The vineyards and the wineries are on the same page. Of course, there's a lot of overlap, and that's a challenge when you're surveying, a lot of different business organizations. A very typical business model is for the winery and the grower to be the same person. And obviously the communication there is probably pretty good. The grower and the winery, they're on the same page in terms of volumes and the market, if it's the same person. So this is really intended to get at growers and wineries that aren't necessarily communicating as much as they have in the past because of COVID, or there might be a reality or an adjustment in terms of market perception that needs to happen as the market evolved as quickly as it did. Obviously, it's hard to survey about price and revenue as we sort of target what the grower needs are and what we advise growers to do, and what we try to as we try to give growers information. One of the most important things is going to be how volumes in the wineries evolve. And that's going to be more important than price. But of course, to a winery, one of the most important things is always going to be price. Growers, for the most part, are most interested as to whether or not you're going to buy the juice. And then the price is a secondary concern. We saw that a lot in the Concord market a few years ago, where price was relatively stable. And because the way the market evolved in that situation was, the juice market, it really didn't matter how things were priced. It was just kind of a yes or no in terms of whether it could be marketed and sold. And that's really is what tends to happen, especially as the market runs out of storage. So some growers actually did relatively well. It wasn't great, but they kept their markets. A lot of them stayed over $200 a ton for almost all years. And then the rest of the growers had nothing. A surplus market at $80 a ton was the best they could do. And most of it was actually worse than that. So really trying to define that price and revenue versus yield in terms of what those volumes are going to look like versus what price is going to look like. Because I think a lot of growers can hold on for a long time when prices go down. And when markets dry up and they just can't sell things, it's a totally different story. So trying to survey that was definitely difficult. And then, of course, all the other sorts of unpredictable stuff that happens. As we were putting this together, we were talking about inventory challenges, and it's like, well, what if there's a major frost and maybe this is just completely irrelevant at this point, at least for the next year. So what I did want to do, and I think we're going to share the total results of the survey at a later date, because I don't want to go through all of the numbers we obtained. I did want to highlight some of the meaningful things we came across and things that growers and wineries reported. So 50% of the growers basically reported what I would call a reliable multi-year market. So a lot of their stuff is sold for this year, not necessarily all of it, and they see things fairly positive for 2021 as well. Only 20% see market difficulties increasing from 2018. So I don't know if you can hear that, but an airplane, I think, is flying past my window. So about 20% see marketing difficulties increasing. That to me was fairly shocking. I don't know if it's because things have just been really hard for a long time. That wasn't my perception. My perception was things are getting worse. So it may be that growers are not necessarily on the same page as wineries yet. And 80% do report some sort of changes from 2019. A little bit less of their product has been marketed year to date, meaning some of those contracts that they thought would be executed by now have not been, or handshakes have kind of gone away, and some wineries have mentioned that maybe there will be some cuts, but those are relatively minor cuts for the most part. There were some major cuts in there, but a majority definitely did not report that. On the other hand, wineries, 73% of them said they would reduce production, 75% see market difficulties this year. Anecdotally, when we were discussing putting this presentation together, Riesling was a major concern, but in the survey, we did not necessarily see specific trends, certainly not by growers. A little bit by wineries with Riesling, but not nearly as overwhelming as some of the anecdotal evidence. So that one of the concerns we have, I think, or at least I took away from the survey, is a possible disconnect between expectations and reality. So the growers seems somewhat optimistic and the wineries do not. That, of course, could also be who we surveyed and where they're coming from. Growers, you know, if growers are in the business of selling to wineries and juice processors, perhaps COVID and winery surpluses will not hit them as hard as it hits wineries financially, so they're less concerned about it. You know, if they sell 10% of their 10% of their product to wineries that are struggling, 90% of everything they do is still fine. So it could be that, or it could be a disconnect between expectations and reality. And I think it's definitely a worthy result to make sure, if you are a grower, make sure you communicate with your wineries to see where they're at and what you can expect in October. So try to go through all the varieties that were reported as being challenging. And you can see that there were some patterns of natives, hybrids, and vinifera. Riesling and Chardonnay were what I took away as the most commonly noted varieties. And then everything else was, you know, it was mentioned once or twice or maybe 3 times. Hybrids, Vidal was mentioned over and over again. And then there are so many hybrids, lots and lots were mentioned. Diamond, and since I'm a business guy, not a viticulturalist, you'll have to forgive me. I can't remember if that falls into native or hybrid, but Diamond came up quite a bit. And then basically all of the serious natives came up as well. We don't see that in the Lake Erie region, primarily because we rely on the juice grape market. I'm surprised that the Concord came up at all, to be honest. We definitely have buyers looking for Concord, but it is not for wine. So that could be why that's occurring. Uh, 60% of growers expect normal volumes or market growth by 2021. So again, more survey questions show a lot of market optimism from growers. This was everywhere almost, but certainly driven by the Lake Erie region. 37% of growers in the Finger Lakes have less committed in 2020 and are a little less optimistic about 2021 as well. So again, if this is not a disconnect, it might be a function of volume and scale. And the optimism in the Lake Erie region, which outweighs that in some of the other regions by a little bit, might be indicative of that. Wineries, 3% reported decline in inventories. 97% report similar or increasing inventories. Inventories are basically up everywhere outside of the Lake Erie region. I was really surprised that Lake Erie region winery side inventories were not up. I think it's a result of who participated in the survey. We definitely have anecdotal reports before we did this survey of some of the larger players having concerns about inventories. So I would be shocked if that's not still the case, at least in the category of having similar inventories, potentially not increasing, but things have not been great, especially in that hybrid market for our growers in the Lake Erie region either. And that's going back to 2018, 2019, the 2019 harvest. So if frost doesn't fix the inventory, I would say 2021 is going to be more of the same for growers, if not worse. We've seen this in the past. We've seen this in the Concord market as well. It's very difficult when you get behind in inventories to catch up, because even if the market recovers, how do you work through that older product? And it continues to take up tank space. So particularly where we saw rapidly increasing inventories as a result of the survey, it doesn't really, I don't think it matters to the growers what happens in 2021. That inventory will still affect their ability to market their 2021 harvest. So in that sense, I do see a disconnect where we need to work on helping growers communicate with wineries, and maybe work on that optimism. So again, looking ahead to 2021 at some more, 25% of growers will change some practice, production practice, as a result of these marketing challenges, which another way of looking at that is 75% will not. The most widely reported production practice that will change is fruit thinning. I hope that means they'll thin more. We didn't necessarily ask it in a way that indicates what they will be doing, but I trust that growers will make good viticultural decisions. It is a little more difficult to talk about what production practices you can change as a result of a market interruption when you're talking about 50 different varieties or so. But for the most part, there are going to be instances where thinning makes a lot of sense. You have less to harvest, you have less disease issues in the vineyard when you're trying to ripen crop at lower levels, and quality is very important, and quality becomes a reason to sort growers when there is a surplus. So you have to pick somebody's fruit to buy, because you're going to buy something as a winery. So you'll just pick the best stuff. And what you'll see is the low end of the market. We've seen this quite a few times. The low end of the market, the surplus market, will start to implement quality controls where they hadn't in the past. So there will be wineries who previously didn't have BRICS standards, or they were not previously measuring total acid, or maybe they were measuring these things, but they weren't rejecting lots and lots of loads or acreage as a result of those tests. That's what will change when there's a surplus. So that's how they'll make those decisions, and making sure your quality levels are standard or higher in the least possible cost when you're not going to sell all of your fruit anyway. Changing your crop balance might make sense. 20% of growers are prepared for 3-year interruptions. That's actually fairly impressive. Basically what we asked growers to report what their cash flow looked like, and if there was a disruption in the market, a sizable one, we used the number 30%. How long would they be prepared to continue to operating sort of as is? And 20% reported 3 years. 60% reported that a short-term interruption would be okay. So that was okay. You'd really want that number to be closer to 100%, but we know that young growers exist, and the industry is challenging, so that's really not a bad number. Wineries report rising inventories, as I mentioned. The COVID-19 overall has been a negative trend, and we'll continue to touch on that in a little bit more detail. 50% can handle short-term interruptions, and only 7% are prepared for longer-term challenges. So from the perspective of growers trying to understand why wineries do what they do, why cuts have to be made, and why the risk of marketing product is shared between a winery and a grower when a grower doesn't control that marketing, it's because financially the wineries can't do it. Wineries can't hold inventories beyond their existing capacity, and they don't have the finances to support it. And you can see, at least based on the survey results, that wineries are not in as good of a position to survive market challenges as growers are. So the only other thing I wanted to add is, again, just keeping in mind as we do updates like this, something like a frost can really throw a wrench in things and change the supply of a particular variety in a particular area. And just because 97% report similar of wineries report similar or increasing inventories doesn't mean that things aren't going to evolve quickly when there's a weather-related disruption as well. So again, that's all I have for the survey. If we get a chance, I'd like to answer some questions and talk about what we can do to react to some of these challenges. What I would say is, the other thing is, we are going to share the survey results. So I didn't want to go through every single thing we asked and report all of those numbers to you. I just wanted to cover the highlights of what I think matters in terms of what wineries were reporting, and how growers might be able to react to that. And if there's something else that is important to your business as a result of that survey, we'll have all of the data available to you as well.
Great. Kevin, thanks for pulling all that stuff together and summarizing some of that. As Kevin said, there's a lot more in the survey, but as far as just trying to get some of the main points out that were in there, I thought it was that was a good summary of it. So thanks again, Kevin. Appreciate it. So the next person, the other person that is going to speak today is Gregg McConnell. Following up on kind of what where the industry is kind of seeing things right now. Gregg, I asked Gregg to jump in with us to talk a little bit about some thoughts about things that growers can think about and some ways of making some decisions. If you're not familiar with Gregg, Gregg has been involved with the winery benchmark program that Farm Credit East has been running for a number of years now. So Gregg has been involved with that project for quite a while, and so has a fair bit of experience talking with growers and wineries about their operations and kind of how to analyze costs and some of these uncertainties and changing markets and stuff. So, and I believe Gregg is also going to have a nice little tool that he's going to share with you and kind of walk you through that as well. So, Gregg, if you want to go ahead and start. Can we hear you first of all?
Yeah, let's do sound check. Can you hear me okay?
We'll have to mute one of those. There you go.
Can you hear me now?
Yep. Great.
Okay.
If you want to share your screen, if you're ready to.
Yep.
Boom.
This.
Yep.
And, okay. I think I got this on the wrong side. Does this show up the full screen?
That's kind of the speaker view.
I'll move it over. How about that?
Same thing.
That's frustrating.
Greg, go up to display settings and just ask it to duplicate the display.
That's a little.
Right at the top of your screen there. There you go.
There you go.
Okay, thank you for your patience, everybody. So I have a brief presentation related to basic accounting. And what I'd like to present is a basic primer on cost of production, and then go into how the tool was developed. So cost of production is something that we talk about in almost any industry. So one of the biggest variables is yield. Yield is a driver in low-cost production in almost any industry. Cost control becomes a second fiddle to yield in most cases. So a survey that was just completed basically indicated that most of the vineyard practices wouldn't really change that much. I'm just going to pause for a second. To our presenters, I am having difficulty with feedback. I'm wondering if I should try to do a switch over to my computer. Hans, were you going to present on the study at all?
I wasn't going to, because some of that stuff is in that spreadsheet panel you're going to do. I can talk about that while you're changing over if you want.
If
just
you would,
introduce it.
that'd be great.
Okay. So while Gregg is working on audio issues a little bit, we apologize for that. One of the things that I just wanted to mention real briefly, and that you'll hear about more in some of Gregg's stuff here, is that there is a new version of the cost of production study that many of you know that Jerry White started many years ago, and has been revised every few years for a number of years now. And so Miguel Gomez, who works in the Cornell Business School, in the Dyson School of Ag Economics, he has had students work with him on revising that study every few years. So a new one has just come out. It was just published in January, I believe. So the numbers in there have been updated. If you're not familiar with it, it's based on a 50-acre vineyard, and that's just kind of there are a number of reasons why that was chosen initially. But I think, so I just wanted to let folks know that there is a new version of that out there. I'll put the link to that study in the chat box here before the end of the meeting, so make sure that everybody has that. Or maybe Tim, if you can search that out too. Either one of us will get it in there. But those are the numbers that Gregg is going to be basing some of the stuff that he's presenting on today. So, Tina says all the links were broken. Well, we'll find one that works, Tina, and we'll get it out to you. It's published in a few different. It's posted in a couple of different spots that I've seen. So, we'll get it. We'll get it to everyone. Oh, there you go. Tim's got it. So hopefully that one is working. So anyway, just want to let folks know that that is out there. Gregg, how are you doing?
Can you hear me now?
Yep.
Great. I'm just navigating to
back to your screen.
Back to full screen. So
okay.
I'm going to try to get back to this PowerPoint. Zoom is not my normal environment here, so I apologize.
Gregg, it's none of our normal environment. Just feels like it lately.
No, it's the new normal.
That's right.
All right, I just shared my screen.
There it comes. Yep.
Can you see that?
Yep, you got it.
Okay. This is much better. Okay, so basically, in short, I think it's wise to at least review variable costs and fixed costs, which are so aptly presented in that report that Hans had just talked to you about. And we'll see what those numbers are. But at the end of the day, variable costs are generally input costs that would vary with the number of acres of vineyard or vary by the type of variety of grapes, whereas fixed costs are generally going to be related to fixed assets like buildings and equipment, and potentially some real estate costs as well. So, real estate taxes, insurance, interest are all fixed costs. And if you have a difficult year, let's say you had an absolute perfect disaster, a complete drought, a complete crop loss, those fixed costs would still remain, whereas the variable costs might be radically changed. If you have, no crop to spray costs would be zero. So that's where variable costs and fixed costs are different. So when you enter a year that's going to be difficult, like 2020 appears to be, you ask yourself, is the price or is my revenue going to cover my total costs? Well, in that study, if you look at the Cornell study that was recently updated, a lot of these varieties in theory don't cover all their costs anyway. So in a tough year, can we look at a couple different layers? One would be, can you cover just your variable costs? Can you at least get to that threshold? And that's a very important threshold to get to. So we'll look at what that looks like. And then in addition to that, can you cover a portion of your fixed costs? So for instance,
I'm going to modify what we look at as total fixed costs to also include just what would it look like if we didn't factor in any depreciation and we didn't factor in any interest. Because not every vineyard has a lot of debt. Some do have a lot of debt. And for that matter, depreciation isn't a check you write every month. So it may be more important to look at principal payments, for instance, than depreciation. Certainly in the long run, you want to cover depreciation in the long run because that's how you recoup your investment in the vineyard. So as we look at this worksheet that I'm about to present, I think the main thing to think about is that experience is going to be absolutely critical for you to help determine what the yield effect would be to any changes. And then certainly this isn't science. It's actually going to be more guesstimation. So focus on reasonable estimates. There's just too many variables to growing conditions to be scientific about a budgeting process. So I think reasonable estimates based on experience are your best approach. And then finally, you also have to factor in your attitude has to shift a little bit to say, all right, if this is going to be a difficult year, maybe I'm comparing two strategies. Sorry, that's my dogs. Two strategies, one that might limit your losses more than another strategy. So that's kind of a shift in our focus. Normally we're gearing up for profit, right? And then finally, does this answer, change depending on the variety? So if you're going to do the math, you maybe have a completely different outcome on Pinot Noir versus Riesling, for instance. So obviously using this updated cost of production study, and I created a tool, and so let's review it here briefly. So on your screen here, Hans, if you could tell me if this can be seen. I'm going to get this a little larger.
Looks good.
Okay, great, thank you. So basically, the way I've designed this is pretty much a mirror image of page 28 in the study. So these numbers right here, profit per ton, will line up perfectly. All the numbers above it, these are hardwired, they won't change. And then the numbers down here, I've created a new category called operating break-even. So that means you've covered all your costs except for depreciation and interest. And in addition, we have an earnings before interest and depreciation, otherwise known as EBIT, which is a similar number. It's basically saying, can I make a profit, at least a basic profit before factoring any debt or investment recovery. So, and again, we have our variable cost, most of which are in a separate tab. You'll see here on the bottom, separate tab called growing costs. Now there's a few other items here, custom harvest and trucking, that are out here and invisible and visible. So on the left is the page that you're actually going to revise. So this is where you can customize it for this year and for your particular vineyard. So where it all starts is going to your vineyard practices and trying to compare yourself to the study. So I took, I believe this was earlier, it was like page 21 or something. And it looked at every practice and an estimated cost for that practice and came up with a total. I think I'm about $3 different due to rounding, but close enough. And then it allows you you can't edit that, that's there for a fixed reference point. It allows you to say, well, for my Pinot Noir, or if you go off to the right, for my Riesling, let me blow that up a little bit to make sure it's all visible here. What would my cost be for pruning? So you can revise here, but not on the reference column. And then as you go down through, you may decide in a tough year that you may eliminate or reduce certain categories. And then this column on the beside it called benefit would be if I reduce, let's say, if I reduce weed control from $117 an acre to $50 an acre, what's that weed control going to do to my yields, for instance? And this has a yield focus, not a quality focus. So there's obviously other layers that you have to evaluate. You know, the bottom line is, and I had a fixed version of this, but somehow I misplaced it. Basically, these numbers on the right all tally up into here. And then I did not hardwire them to also go in here. The concept is, here, let me unprotect here. The concept is that you don't get an additive effect in biology. You really can't say, I think I'm going to get a quarter a ton decrease because of this activity, and have it just in a very fixed nature drive that right down to your bottom line. So I'm just using this column to sort of take notes. So have the vineyard manager take notes on what they think the effect will be. Let's say we have a total of, you know, 3 1/4 tons here. And then if you had that 3 1/4 tons, you might say, well, that's ridiculous. That means I have no crop, you know. So if we had, well, I guess it's a little less than that. So if we have that, and that was supposed to be negative. Apologize. I actually did practice this presentation, but it doesn't appear that way. So you might say, well, I've got an additive effect of a -3, but I'm never going to be that bad, right? So this gives you a chance to just get back to realism and say, all right, let's just put in here that we'll probably have a yield of 2.75 tons. And it also allows you to change the pricing here. At the end of the day, all these items, these pink items, flow through to the original tab. And then, so you would see, like I say, this, I somehow messed this up. I apologize. I had another version of this that was all fixed this morning. So basically that flows through and it drives down to a bottom line. And then as you look at these results, what you'll find is that yield will definitely trump a lot of these cultural practices that you're gonna have decisions to make about. And if we look at trying to drive profit, I think profit is probably a little bit whimsical right now, but if we had losses, you know, if we're facing a loss, let's just say, I did make this an open item. If we're facing a loss of price, for instance, you know, we may have, you know, obviously I guess this sheet was not the right sheet. That should have driven a negative number. If that number compared to this number is how you would look at limiting your losses. So that's the concept, Hans. And I think the idea here is you have some hard decisions to make. If you think you can grow, you know, X amount of tons, how much of that do you have a market for? I think it's a difficult thing to think about reducing production to save cost on a business as input intensive as a vineyard. I'm just going to pause there and see if there's any questions. I'm also going to try to find that revised spreadsheet here. Let's see here. That's where it was. Okay. So I think what I'd like to say at this point, Hans, is back to you. Let's see what if there's any chat out there or if there's any follow-up to my comments.
While folks are, yeah, I would echo, if you have questions for Gregg, please type them into the chat box, and we'll make sure that he gets those. One thing I just wanted to reiterate, I wrote something in the chat box there, but I also wanted to just verbally acknowledge it too. The study that we've been referring to, the cost of establishment study, is for vinifera production in the Finger Lakes. So it's that's why Gregg is referring to Pinot and Cab Franc and Chardonnay and Riesling, because those are the 4 varieties used in the study. And Greg, maybe you can comment on this. Obviously, there's a lot more. There are a lot more varieties grown out there than just those 4. Do you think that, I mean, it seems to me you can use this tool with a little, you might have to do a little bit of tweaking with it. But if you grow, say, Cayuga White, which maybe doesn't have all of the expenses that are in there, you can alter kind of those inputs that you have on the growing costs tab there, and still get some idea of this. There is a study that looks at cost of production of hybrids also, but using this tool, could you also use it for other varieties besides those 4?
Yes, definitely. And I think,
Okay.
I think if you know, one of the approaches to this would be to try to use this tab over here of growing costs and actually replace some of these numbers with what you think your own average for your vineyard is, and try to make sure that if you spread it between varieties, you know, let's say you grow 50% Cayuga White, you have a lot of diamonds, and you have, you know, maybe 10% is vinifera. You know, you kind of have to allocate those costs between each, you know, type of grape, and then hope that the total still matches your overall business. You obviously have to have a reality check. Does it tie back to the total business?
Right.
And I think that's generally the best practice, so that you know what your numbers are. But if you just want to play with the actual report, I think the report gives you a nice basis. So yeah, this tool could be adapted to using your other reports that Cornell has come out with to different regions or different varieties.
I know there was at least one study done based out in Lake Erie, if I remember right. Is that right, Kevin?
Yeah, so there's a cold hardy hybrid study that was done in a couple of different regions, one including Lake Erie.
Okay.
There was going to be one on, I think it was Concords. I don't think it was natives. I can't remember what they were going to call it.
Okay.
And that was just going to be Lake Erie based as well. COVID may have delayed the production of that. I'm not positive. They were going to try to do it without the grower interviews because of the similarities between the hybrid production and the native production. And we kind of went through the differences of those more manually. So if you're not familiar with these studies, they're basically produced by getting together a round table of growers to discuss and agree upon costs of certain activities. And they don't necessarily, so it's usually compiled by grad students and extension educators and faculty help in terms of streamlining the communication, but they don't necessarily say, you know, what do you think it costs to spray your grapes? It's more like, what do you do? And then when they get into like, what do you think a grape post costs? They ask growers questions like that, and then they sort of do the math so the grower doesn't have to do that math in his head, and they come up with these types of studies. So that's how they get at those numbers. And I think it's a particularly useful tool to start building models with, and I would use it on your own farm as well to start building kind of your own model the way Greg was encouraging you to. Because, you know, I think the one thing I would say is you can see that certainly when you look at the overall profitability, it never seems to work. I think you can make it work in certain instances. So looking at these numbers helps you define what it's going to take to make it work. And, you know, obviously the easy way is to just double the yield and then everything always works. But sometimes that's not practical because you can't crop Pinot Noir at 10 ton to the acre, even though it would make things really easy. Because nobody's going to buy it. But we have a lot of experience with this, I think, in Concord as well, where yield is no longer a function of the capacity of the vine, but a capacity of what you can sell. And it doesn't necessarily make sense to produce 100 ton of a variety if you can't sell 100 ton of a variety. But a tool like this, where you're looking at your fixed costs and your variable costs to try to understand where you can cut your production. So do you cut everything to 1 ton to the acre? to market, to market what you can market, or do you cut half of your stuff to 2 ton to the acre and then just stop farming the other half? And I think taking a look at numbers this way will help you make those decisions. I don't think anybody's going to make those decisions in May, June of 2020. I think they'll make those decisions in October or November, but there are going to be some decisions you can make. There are going to be some of those decisions you can make in the growing season. I think one of the things that could happen in natives and hybrids for sure would be something like mechanical shoot thinning or mechanical crop thinning. Things that you might be a little more things that you may already do, but you might be more aggressive with because of the market. And it's not necessarily going to affect your profitability in a negative way or your gross revenue if you reduce yield that you weren't going to sell anyway. So obviously that takes some discussions with your markets, because there's going to be some room for some speculative marketing as well, and that's going to happen. Maybe there is a secondary market available to you and you just got to find it. But if you can figure that out now, you can make some decisions now.
Yeah, Kevin, this is Tim Martinson.
Yep.
I just wanted to point out that thinning down your crop is not cost-free either. It costs money to do that. So,
right. And I think that's why something like shoot thinning might make a lot of sense in certain varieties, because it's a fairly inexpensive practice. From the perspective of cash flow, if it's something you already do, it doesn't cost anything if you do it yourself. You're talking about unpaid labor, fuel you probably already purchased, and which is free now anyway, just about, and some depreciation on a tractor you already purchased. And it saves you that, in this study, almost $100 a ton for harvest. So yeah, absolutely, it does get complicated, but I think strategically there are still some things you can do that make a lot of sense.
yeah, and to me, some of the other things that you might do with the vinifera, like repeated shoot positioning and leaf removal, it might make sense in some, if you don't have a market to cut back on some of that stuff, but you certainly wouldn't want to cut back that much on disease management or weed management, that sort of stuff.
Yeah, you definitely don't want to do anything that's going to result in a quantifiable change in your quality that can be measured at harvest, because you're more apt to lose a market than you are to save the $100 an acre, depending on which practice you're talking about. But it's rattling off a couple of the ones you mentioned. But if you're saving $100 an acre and you jeopardize your market, because I do think quality standards, if there really is a surplus, will be implemented in areas that they didn't exist before, or enforced in areas that they didn't exist before. So if it's going to have an effect on quality this year that's measurable, it's concerning to me. If it's not, if it's more of a long-term investment, then it's less concerning. If it's I don't want to say the buildup of inoculum, because fungicide sprays are so inexpensive, you're not going to save any money anyway. But the idea that you're going to have a harder time spraying next year is not something that's going to motivate me to spend $500 an acre this year. But if it hits my bricks, if it hits my total acid, that means it probably hits my market this year, and that's what concerns me.
Yeah. But on the other hand, you might say, well, I have, I have half of my Riesling sold, so I'm going to really concentrate on that half and keep the quality up, and then sort of mothball the rest of it.
I think mothballing is not a very effective strategy. We've seen that in Concords, and Concords are fairly forgiving. It basically becomes an asset that depreciates really quickly. It's like, yeah, I've got this one house that I can rent out and this other house I can't. And if it needs a roof and I just don't replace it, in about a year, I'm not going to have a house anyway. So I think those types of decisions depend on your outlook. And I think growers should really work on informing their outlook in case there is a disconnect between the wineries and the growers. And once they're confident in their outlook, if you think things are going to be bad for longer than you can survive, I think that's a good strategy to quote unquote mothball or terminate a plot. But if you think this is something that you can survive until the market returns, I think it's probably not a good strategy. Your fixed costs are you're going to be stuck with them. And if the market returns and you're gone, or maybe even worse, half gone and stuck with your fixed costs, it's going to be much more difficult for you to recover. So mothballing is a real challenge. I think abandoning and moving on from a certain block that's unproductive might be a little more effective.
These comments show a lot of finesse that is very helpful, I think, to the audience. And I think the things that I really took away, Kevin, and from what you said is sort of that short-term look versus the long-term. If you can maintain quality and yet cut some costs that might affect yield and survive in the short run, maybe that can be done, you know, or maybe you need to, you know, but maybe you can forgo some of these, you know, maybe you can forgo lime. Maybe lime won't have a measurable effect this year. It will in the long run, or something to that effect. So there's some short-term, long-term decisions that you can make. Certainly, you know, driving for every last ounce of yield might not be as imperative this year, you know, in terms of trying to make things work. One of the things that I've been dealing with in some other industries I work with is when the numbers look upside down, it makes you think really, really hard. And but everything you just said makes a lot of sense in terms of trying to prioritize, you know, prioritize quality, think long and hard about long-term investments before you pull the trigger on those, in terms of not even investments, but just inputs that lead to long-term gains, but not short-term ones, and do whatever you can to preserve your market. I would like to also say that I liked what Hans, I think it was Hans said, no, I think it was you, Kevin, again, said earlier, that is the perception and reality sort of linked up, or is there a disconnect? I guess that was Hans. And I would argue that nobody really knows what's going to happen at the winery level, especially right at the moment. There's just too many unknown factors. And I would say that, you know, it's pretty obvious that the winery sales channel, even in the survey, indicated that shipping wine and online sales have surged. So I think there is some compensating effect, at least early in the year, on volumes being sold. Don't know if that's enough to get us through the year without significant trouble on inventories, but I think it's a safe rule of thumb to say this. I think it's wise to assume that things aren't as bad as your worst fears, and they certainly aren't as bright as your brightest dreams. It's somewhere in between those two boundaries. And if we just get completely doom and gloom, you know, you kind of try to do something radical in your decision making, I think you'll live to regret that. I think it's wise to just, you know, take a look at some smaller decisions that you can make and do the best you can to muddle through this year. And when we have clearer insight as we enter the fall, I recognize I won't help this year. We can do a better job of planning for 2021.
Yeah, Greg, I agree. I think some of the input we got from wineries, I'm sure, might be informed just by, you know, day-to-day life is dramatically different for somebody who was in and out of a tasting room every day, because it's basically shut down. Whereas the growers themselves, you know, if they're purely just growers, life hasn't changed all that much for some of them, because they, you know, they're an essential business. They're out and about outside in a fairly safe environment, and they just keep chugging along like they always have. So it is hard, I think, to answer some of these survey questions. In terms of making up for sales, we did sort of try to touch on that. And 25% of wineries are basically in a good position. They're having a lot of success with these new marketing channels, and they're doing a good job of offsetting lost sales. Another 18.5%, which is totaling 45%, don't see dramatically different changes. So they're almost offsetting, or they're completely offsetting. So that leaves 55% of the wineries that see this COVID issue as serious. I think we talked a lot about this before this meeting. We didn't necessarily ask the wineries about it. So serious in March, April, May is actually not all that serious of a problem, depending on when they get to open up and what kind of business returns when they do open up. If July and August are blockbusters, a serious problem in March is completely irrelevant. So again, I think part of the reason we do surveys like this is because we don't have the confidence to prognosticate, because it's impossible. So we throw it back in the laps of the growers and the wineries and ask them to do it for us. And they're the ones that have to do it anyway, because they have to make decisions about their business with the best information they have. And we can share it with you, but we're certainly not in the best position to guess. So we let you do that for us.
Yeah, if I can jump in here, there's a couple of verbal comments that we asked for at the end of the survey that sort of stood out to me. And one is, I'm a winery that, 40% of the stuff is stuff that I produce myself in the vineyards, and the rest is what I purchase. So this year, as my sales have gone down, I'm going to cut way back on those outside purchases. That was one thing I heard. I saw. Another one was, we do a lot of custom production for other wineries, and that's going to be, way down. And in some of my grapes that I use for that custom production, then I'm going to have to absorb those, and that will have some impact on how much wine I want to make this year and next year. So I thought those were interesting observations.
I think that the thing that I take away from this as much as anything is the points that I think both Kevin and Greg made about thinking about things as growers are contemplating what, let's just call it what it is, where to cut corners, or kind of how to kind of play conservative with your practices this year. Are kind of what are the things that are going to have impact, things that might impact this year but not longer term. I think you were talking about that, Kevin, especially. We talk about the importance of if you cut back on the number of disease sprays you do this year, that depending on how the season goes and all those kinds of things, that potentially has ramifications down the road in subsequent years. If you remove more of your crop than you normally would, you have less potential revenue because you have less crop, but you will have healthy vines and whatnot next year. Tim's point also being an important one, that it costs money to thin off crop. But a number of growers will go out and do that in years anyway. If you think you have 4 tons of Pinot Noir hanging in there, you're going to probably, a number of growers will probably go in and try to thin some of that down. So I think that kind of decision making, so that short term versus long term, and also in like Greg has in his spreadsheet, kind of considering how those things that you decide to cut back on, what impacts, it kind of related to that, what impacts does that potentially have on your yields? It's a bit of a guessing game for some of this stuff, but as both of you made mention, the quality concerns can be just as much. A yield loss doesn't just have to be, grapes that don't get ripe or grapes that fall on the ground or whatever. It can just be stuff that just doesn't get accepted at the press, by the buyer. So. Yeah.
And I think, focusing on revenue per acre, like Kevin said before, you look at, can you sell all your Concord at $200 a ton or most of it? that could drive revenue per acre, even though the price might not have a lot of sex appeal, you know. And so revenue per acre probably matters. Total cost per acre matters, and how you find that sweet spot. That's where the art of business comes in. So.
Okay. I haven't seen any other questions come through the chat there. What I did see one though, Greg, what would be the best way for people to get this spreadsheet? Should they just email you? Would that be the easiest?
Well, I'm content, Hans, if you want me to get it to you and people can get it right straight from you, that would be fine. I built it for the vineyard public, so to speak.
Okay.
It's going to be protected, but without a password. So all you have to do is unprotect. There's a couple different ways you can get to that. Go to review. You know, you would just hit that unprotect. You know, you'll fit. You know, most of these folks that do a lot of Excel will figure it out. So it can be adapted. You know, so it and definitely what I forward you, Hans, will be working.
Okay. Okay, so why don't we do that? I will, Greg will send that to me, and we'll put it on our website, and I'll make sure that people get that, have that link. You can get that, or if you want it sooner than that, before we can get it posted up, you can just email me and I can forward it to you as well. Yeah, so let's handle it that way. Great. All right, so just seeing the time, it's a little after 5:30, and wanting to honor everybody's commitment, I just want to make a couple of quick last announcements about a couple of things. First of all, the next, there's a whole lot of virtual meetings, as you're might be starting to see, while we're kind of isolated away from each other. The first one that I wanted to mention real briefly is, and let me get this up. All right, is the Lake Erie team that Kevin is a part of has weekly coffee pot meetings. They're kind of similar to our tailgate meetings. They're just held in the morning. And the next one is tomorrow. And it's going to be Katie Gold and Brian Head. Both are grape pathologists. Katie with Cornell and Brian with Penn State out in Erie County there. And that goes from 10 till noon. Is that right, Kevin? It's 2 hours?
That's correct, yeah.
Okay. And so all of those meetings from now until I think the end of July, all of those meetings have been approved for pesticide credits. So if you need pesticide credits, you can attend those meetings virtually on Zoom, and you will be eligible to receive that. Just a quick note, I'm going to be posting our tailgate schedule as well. We're going to be starting our tailgate meetings here very shortly. And those also will have pesticide credits, as we have in the past. So wireless caller. Somebody want to get that?
Sorry, that's me. I thought I was muted.
And then the other one I wanted to just mention, the next one of these Thursday meetings, or Tuesday meetings, sorry. God, what day is it? On next week, June 2nd, is going to be talking about grapeberry moth and mealybug management with Greg Loeb from Cornell and a colleague of his, another entomologist, Rufus Isaacs from Michigan State. So again, that will be next Tuesday at 4:30. So if there are no other last minute questions or anything, I would like to once again, thank Kevin and Greg for their work in putting this together. Thank you, Tim, for kind of helping to run the show. And if folks have any follow-up questions as well, please feel free to reach out to me or Kevin or Greg. If it's easiest to get a hold of me, I can forward stuff to folks or whatever. I think this won't be the last time we'll probably be talking about this. as the season goes on, as we kind of get a little bit more definition to how things are going, we'll very likely be returning to some of this discussion down the road. So thanks again, everyone. Appreciate it. Have a good evening and enjoy the suddenly very summer-like weather. Take care, everyone. Thanks again.